today's session, guys, what I sort of want to achieve for you and myself is to show you how I trade gold, show you my sort of interpretation of gold, and yeah, hopefully you get some value from today's session.
Cool.
So yeah, for me, when I do my top-down analysis, I'll start from the 6 month and work my way all the way down. So on the 6 month here, not much is happening really. So we broke structure here. And yeah, we've just held structure here. Obviously, feeling this little bit of imbalance here. Too close. So when you guys do your top-down analysis, do you start from the 6 month or do you do the 1 month?
I do. I start out higher time frame and kind of work myself all the way down depending on what time frame I want to trade.
Yeah. I do find starting from the 6 month is really beneficial. So obviously not much in the 6 months going on. We've broke structure here and we've held. So I'll drop down to the 1 month, and we sort of got this this trading range right here. So you know, my sort of first interpretation is we're going to hit back and down into this range over time, but you know, that could be weeks or months. So I don't really spend too much time digging into the details of the like the 1 month, the 6 month. Go down to the weekly. So at the weekly is sort of when I really start to try and build a picture of price, what is happening in the market, and you know what I can expect. So here, if we follow the order flow, so we've gone up, down, up. So this zone here, I'd be looking at that as my sort of my order block or vent block. And what I like to do with gold are either target 50% of an order block, or I'll go for the origin. So in this example here, the 50% zone is something I really like to see. So you've got this clear demand zone. You've got impulsive price going to the upside, and you've got break structure here, and it's left inefficiency here. So for me, that's a major confluence that I'm happy to use that area in the future if price comes into it. So I'll just mark that out. Delete this. So sort of this range here. This is really what I'll be looking at now and sort of trying to like further develop on my story. To come out. As you can notice here, after we broke structure, order flow has been slowly coming to the downside. So to me, I'm bearish on the weekly time frame. So what I normally like to do is just map out the where structure's held or where structure's been broken. So, do many of you trade gold?
Eski, I don't.
You don't?
Not really, bro.
I want to, but I'm still trying to get used to EU. Future.
Yeah, so, yeah. What I sort of find with gold is it follows structure really, really well, but what it's prone to do, it will go through these periods of building internal liquidity, and then all of a sudden it will do an extreme liquidation to the top side or bottom side. And when it does that, it's really easy for it to throw you off on your bias. So as we get into the lower time frames, I'll give you some examples. So yeah, so not much is happening here really. So we broke structure, like I said before, and weekly order flow is slowly sort of coming down to the downside. And my overall bias is, at some point we come to feel this inefficiency, we come to this demand zone, and maybe start going to the top side. But in terms of an intraday bias, sort of a weekly trading range, it's not something I need to focus too much on. And one thing I do see here though is here, to me, I'm seeing lots of stop losses there, lots of liquidity, which at some point should be run, which really sort of builds into my bias of this inefficiency being filled, this demand zone being met within our overall order block. So, map this out. But yeah, something I like to do more on the higher time frames is just use the highlighter tool, and I'll just dot out each higher high or lower high, lower low, or higher low. Yeah, so at this point I'm sort of satisfied. I'm not really looking for a sort of some major longs to come out of here, this demand zone. So, for me, I really got that bullish bias in place. So we go down to the daily. So what is really good here, and this is what I find with gold, how it really does hold structure really, really well, is this breakdown in price here. If you were to be trading it, you've got your order block there, price breaks, it validates it, comes up, holds it perfectly, creating another order block, and we come to mitigate all those orders, release all those orders, and at the origin sort of area, we drop back down. So I'll be looking at this sort of leg here as our weekly trading range, and then I'll start to look at daily order flow. Yeah, so the story here is quite obvious. We've come down all the way to the bottom, and here is, you might think we've held structure here, but Do any of you remember what happened here? This major drop was a big news event. I think Asian session opened and it just absolutely plummeted. Obviously holding this zone, and I think it's quite easy to feed into the notion that we're holding structure to then maybe clear this liquidity. But this sort of wick here, from my experience of trading gold, I wouldn't really be looking too much into it. All I see here is big drop, leaving massive inefficiency, and price is simply traded up to fill that efficiency and release orders from these supply zones up here. So we've got a sort of bearish daily price action in place here, so I'll just mark that out. I'll just get that one to
Yo, what's up, y'all?
What's up, Julius?
What's y'all looking at?
Yes. How you doing?
I'm working right now, y'all. Saving up my account.
Julius, is that your mic? Get your mic on.
Is it what?
Mute your
Is that
mic.
your
Mute your mic.
Yeah, calm. Right, so we've got our weekly trading range, and we've got a sort of bearish bias in place. In terms of daily price action, we've sort of gone bearish still, and then we've had this little bullish sort of leg coming up to meet these supply zones. So what I've really learned with gold is to really not marry a bias, because gold will quite literally do what it wants. And what I've found is I'll have a bias in place, and I sort of marry that bias. I don't know if that happens with any of you. And sort of once you marry a bias on a psychological level, when it's not playing out how you sort of intend it, you find yourself getting into reckless trades. So although I've got this bearish bias here, one thing I do see here is, tons of liquidity on these relatively equal highs. So, I'd be looking at this area thinking, right, we've got stops here. So price could start to make a run to the top side and maybe even come to break this. But for now, we'll see where price takes us. So again, looking at order blocks, gold just follows it beautifully. So got order block here, and we've got an order block here. So obviously we all know what happens this trading week. But if you're following order blocks, it's no surprise that price starts to drop. So that's it, done enough for the daily. So at this point, I will have a look for any sort of POIs. So for me, this wick here is what I like to call a hidden POI, and that is basically, so this would class as a demand zone. Although on a daily, you don't have the characteristics of what you'd expect to see, because all you have is 3 down candles there. But for me, it'll be a point of interest, and I'll drop down to an 8-hour to see if there's anything good there. So, let's get this right.
Esky.
Yeah.
So that I see how it has imbalance in there, but why that particular candle? Like, why not consider like the wick or anything?
Well, this one here.
Yeah, the one you're about to drop down to the 8 hour on, that demand zone you just said. That hidden one.
Yeah, so for me, it's kind of, I guess it just comes from hours on the charts and just like watching price repetitively each day. But so I'd be looking at this as a point of interest purely because we've got this imbalance here. Yeah. We've got liquidity to the top side, so I mean price could potentially break out and then come back into this. And if price did break to the top side, this would become an order block, and we take 50% of it. It would fit it perfectly. So for me, what I like to do is try and build a story if price is going both ways. So obviously we know price doesn't get broke to the top side, but when I'm building my sort of macro bias for the week, I'll be thinking of all possible scenarios, what might play out. So I would highlight something like that, and price may never go to it, or it might hit it and give a good entry. But I sort of just try and build a story where anything could happen. So for me, anything was a 50% level, even though it's not validated yet. I mean, you could validate it if you use this down move here as an order block. But it's just something I like to use. So if you go down to the 8 hour, you have this really, really nice demand zone. This down move here. We're sort of came to test price within this order block, and then we get this sort of impulsive move up. Does that answer your question, or is there anything else?
Yeah, it does. Thank you.
Yeah, no worries. Yeah, so I go to the 8 hour. Again, I don't spend too much time on the 8 hour because I prefer 4 hour order flow. Yeah, so I'd have a look. But if I'm looking at like a daily hidden POI, I'm sort of looking at the 8 hour time frame to see if that sort of correlates with why I'd think it'd be beneficial to use that as a supply demand zone. Yeah, so we've got this zone here. Obviously, we've got this big wick here. This sort of zone here, it's too big for me to like use as a POI. So if price starts crashing down on a sort of like a macro level, so like the real high time frames, I'd have to see what structure develops afterwards. So yeah, I'll just drop down to the 4 hour, and then we just sort of try and see what's going on. So as we can see, we immediately, so we spent a lot of time building this order block here. And sort of something I like to see as well when forming a bias is what the candles are doing. So if you see here, we have these real impulsive candles coming to the downside. And so that move there took 2 days. And you see how price sort of correctively comes back to fill this inefficiency, taking about, what's that like? It's like 15 days. And then structure sort of starts to break down again. For me, when price comes back into this zone, it adds confluence to, okay, we're going to start changing structure and dropping back down to the downside. So at this point, I will map out the 4 hour. I'm not necessarily using swing points when looking at order flow. I mean, this might be right or wrong to do. I'm not too sure, but it's just what I've used. So I sort of follow the highs and the lows because I mean, it's not all necessarily swing points, and just sort of see what structure's doing. So yeah, we've had this sort of bullish price action in place for most of August, and obviously we've come into September and we've had a clear change of character right here. So it'd be reasonable to assume price is going to go bearish on the 4 hour until we potentially hit this zone or maybe even drop below. So I'll be looking at this break. That's our sort of change of character here. And for now, we've held this, and yeah, I'd say, even though like if you look at the order blocks, look at the order flow, it's quite clear it's going down, and you know, having the bearish bias is not the wrong thing to do. Sorry, this amount of liquidity here, you know, these relative highs, you know, I think when I was trading this last week, I was very much interested in maybe seeing price going back to the top side, what obviously never happened. Yeah, so once I've done that, I'll start to look at sort of order blocks within this range. So for me, I'll have this highlighted. Yeah, I'll be looking at this most likely. And I suppose this is also a valid order block within the 8 hour POI we had. So mark that up. And I'll be looking at this as well. So yeah, once I'm happy with that, I sort of start to look at demand and supply zones, what I might think start to get hit within the weekly session or my intraday sessions. So with gold, what I find, it will either most commonly will hit the 50% level if the price action's right. So what I mean by that is I sort of really look at the supply and demand zone candles and their formation. So I'll get into that a bit more in a minute. If not, gold very much likes to go to the origin, like the extreme bottom or top. So for me, I'll be looking at this here. Supply zone point of view, just bring you in. I mean, I'd be looking at this purely because it's not mitigated. It's quite clean. Efficiency below the zone. I'll have one last look at the daily. See what's going on. Yeah, so we've got quite a nice daily supply zone here. Probably also make reference of this. yeah, so now this is when I start to dig deeper into the lower time frames, because for me, the way I trade, it's very much the 15-minute is my range, and I focus a lot on 5-minute order flow. So when I built my sort of system, it was sort of built around the idea of being able to jump on the charts at any time and be able to get into trades, because my job, or soon to be my old job, is quite demanding. So I wouldn't necessarily be able to have this sort of consistency in place to say, right, I can trade every single day between 7 and 9 a.m. or I can get on every single New York session. So as I sort of transition into a full-time trader within the next month or so, I'll probably start to move away from this system a little bit more and refine it to get a different type of entry. But what I like to do is trade around the swing points of a 15-minute range, look for a break of order flow on the 5-minute, and then look for a 15-second Wyckoff. But the Wyckoff has to meet certain criteria, what I look for. Something else I will also do, if we are at the extreme points of a range, I will not wait for a 5-minute break of structure or a 5-minute change of character, but I will look for a really, really nice 15-second Wyckoff. Again, this is something I'm going to start to refine, because this system was built off the back of me having quite limited trading time throughout the week. So at this stage, I'll be looking at sort of what structure is saying on the 15-minute and trying to find some sort of points of interest. So let's get back on the 4 hour quick. Just dot this out. Now for me, something I should have mentioned earlier. So when I look at breaks of structure, the rule I have now, this might be different for you guys. I need to see pre-candles on a lower time frame close above or below my structural point. So on the 4 hour here, see how we wick out. I'd probably look at the 1 hour and think, yeah, okay, so actually we are potentially breaking structure here to the top side. So I'd keep that in mind. So we've held here. So when I said earlier about gold, it really likes to build internal liquidity and then take it. So it's a sort of master of fake outs. And so what here? So although we've sort of held structure here, and you could argue we're potentially going to break up to the top side to maybe test this or start clearing the stops I mentioned. I wouldn't be surprised if this does get broken, purely because gold does it liquidates so frequently. Yeah, so for me, POIs here would be close this in quick. I'm not going too fast, am I? Is this all making sense?
Yeah, it's perfect, mate. Thank you.
Right, so if we look at the story of price here, for me, now again, not everybody does use order blocks in these ways. So for me, I would class this as a valid order block, even though there's a up, down, up move. It's not just a pure up move, because I'm short on a higher time frame. 2 hour, not necessarily. But for me, I think this just really applies to gold. I mean, it could apply to other pairs as well. I mainly just trade gold. But for me, I'd still be interested in taking the 50% level, or at least having a look at what's happened in price. So, you know, 50% level, we got this wick here. So, and this is something I do with gold as well. I will look at wicks and what they've done. And sometimes I'll take a wick as just a wick in itself as a S&D zone, purely because within this wick, there's still orders what need to be mitigated. So you could argue prices come up, opened, potentially mitigated everything here, and there's nothing left of value here. But if you sort of backtest this in gold, it very much likes to come to these 15-minute and these 5-minute wicks, and yeah, it's something I find quite effective. So in terms of the extreme 15-minute range, here is where I'll be looking for zones. So, you know, I'll take this wick, and to me that's a valid POI. And I'd also just take the origin zone as well. So, you know, this up move here. Let me take you. Okay, so again here. What I do is sometimes a 5-minute or a 15-minute zone on gold will just be really big. So again, I'll focus on the wick. The wick's what's been created, but in this situation here, actually, it's quite a nice zone. So we'll take you. Yeah, so for me, the price is already here. Obviously, I think we just starting the week here. I'll be looking at this, but at the same time, I'm really conscientious to the fact this could just be liquidity what's been built to be run. But if you see what has happened after this zone was formed, is taking all this topside liquidity here. So to me, this could easily be a protected low for now. So I'd be happy to use this zone, but I will be sort of keeping an eye on the fact that we've still got this wick here, and we've still got this really nice zone over here, you know, unmitigated demand with efficiency, what's not been met yet. But from a sort of intraday perspective, I'll see what this zone does and see if there's any entries. So we come in. So where I said earlier, I'm happy to look for a 15-second Wyckoff at a sort of origin point before we see a 5-minute shift. The Wyckoff's got to meet certain criteria, so we'll see what happens. Right around. See that it's just building this liquidity right here, and I can imagine it gets run. So maybe got sort of some Wyckoff forming here. Some equal highs there. There's nothing I see what I like at this stage. Right, so, okay. For me, the way I sort of set my entry point and stop loss is off the order block what's created when a Wyckoff schematic is completed. So, you know, the spring what breaks AR or SOS, or the UTAD what breaks the SAL. Because the way I trade, I do not partial, and I'll either 3 to 5 RR or sometimes 6 or 7. And I trade like that purely because what I found when I was going for much larger moves and going for like a partialing system is I really struggled to hold on to the trade and let it run all the way, or I'd over partial, because you know the way my sort of personality is set is very much when I see profit I want to bank that as quickly as possible. So it's something I'm working on. So for me, the order block what's created of a completed schematic needs to be reasonable for me to achieve the RR I want to get, and obviously target the liquidity points I think is going to get run. So as we see here, we have a very large order block. So if I was to think about trading this, for my entry rules, I'd have to have a sort of stop loss like this. And for me, you know, the furthest I could see this trade running is maybe to take this liquidity here, fill the imbalance, and meet one of my POIs. So from an RR perspective, you know, yeah, look, it's not satisfactory enough. So for me, I would leave it. But what I will do off the back of that is then see what happens with the 5-minute order flow, and then this sort of order block now becomes a POI. And if price comes back into it, I will look for another 15-second Wyckoff, and if that is a schematic what I can work with, then I'll move to enter. So yeah, so it's pretty much the same zone, so I'll enlarge it. Okay, so it goes to
it's Danny. If it comes up and breaks some structure to the upside, would you be willing to take 50% of that last down push? Because that would give you about twice the RR that you were just looking at. Would that be worth it for you?
Yeah. So, I mean, again, that is something I used to play with. So I would quite literally take 50% of the move, and obviously go long. And you're absolutely right; it would give me the right RR. But the reason I moved away from it is, I suppose from a consistency point of view, I sort of just want one type of entry, and that is to sell or buy the order block to my liquidity target. Again, it is something I'm working on. I might go back to using the 50% and doing either doing a limit there, or like a market execute. At the moment, I just do market executions. Yeah, it does work. It did work for me, but I think for me, the problem is, I guess this comes down to my psychology, where I sort of get price, come here, come like this, almost touch the 50%, and I'd enter maybe prematurely. It would come up, then it would come back down, then it would fly off. So even though it was a winning trade, I'd get frustrated in myself for not being patient enough to wait for the 50% to be hit. So for me, if I'm just buying or selling an order block, what is for me a good looking order block, I found it easier for myself to be consistent applying that. If that makes sense.
Yeah, definitely makes sense, for sure.
Calm. Right, so give it a you. So to me, it's very much what happens from this point. So we'll let that price run. So for me, I'll be really interested in this, because if I enlarge this a bit, these internal sort of supply zones are starting to get run. We're taking the liquidity here. So I would, if price touches this and it's an acceptable Wyckoff, I'd be looking to enter. No. Okay, I won't. I'll tell you what. Yeah, so no, this isn't what I'd be looking for. So no, run. So what's good to observe here is we've been trading in this range, building a lot of internal liquidity. So like I was saying earlier, gold as a pair, it very much likes to trade within the range. If it's not going through like some major markup, like so, for example here, it will just build this liquidity, take it all, both sides, and then make a move. And this sort of applies on, I suppose, every time frame, because the market is fractal. So if you see this same example, we set our sort of 5-minute range high and low here, and we build liquidity. For me, I very much want to see price sort of come into this a bit more deeper. So I'll go down to the 15 seconds so I don't miss the move if it happens. Yeah, so for me, this is really nice. So you got your standard Wyckoff, so your preliminary supply, your sort of selling climax, AR, ST, price, then obviously you could argue STB, mini spring, real nice liquidation candle here, and it's a really nice impulse up. So obviously I'll be looking at this as my order block, and then there's this as my order block, this move here. Or you could sell buy stop that if you wanted. And in terms of a liquidity target, I would be looking at something what could give me good 3 to 5 RR within my bias. So obviously my expectation is we maybe come to this order block and price goes bearish off the back of the change of character we've had on the 4 hour. We've got some really nice liquidity points here. So we see this, yeah, that is almost just about 4 RR. So we see that runs, yeah, that runs quite nicely. And that's for me, yeah, pretty much a standard trade. Again, I think it's really different to how I suppose a lot of you guys trade. I think for me, this sort of, it really works for my psychology, and I do believe psychology is, you know, absolutely everything, because it will dictate whether you're consistent or not consistent. So yeah, I would like to catch, you know, like 20 RR moves, but you know, for me, I don't see myself developing consistency through chasing this kind of trades. So you see how price hits my PIY here. So I just want to reverse and go back to the 15 seconds. So because I see this as a sort of our potential extreme points of the range where I could get an entry. So for me, if I was to trade this, if I was to sell this area, I'd very much be looking at this zone here, because I'm very much a scalper, intraday scalper. So even though price could easily go boom, 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 I like to catch that sort of that retracement, and it allows me to, obviously, when I was only able to trade at certain points in the week, it allows me to at least try and get 1 or 2 trades in during my sessions. So if we go to the 15 second, I'll show you guys what I'd sort of be looking for. So for me, as long as it's a 5-minute zone, I'm happy to use the whole zone. So price can either tap it, take 50% of it, go to mitigate all of it. If I see the right breakdown on a 15 second, I'll be happy to enter the trade. But yeah, one thing to note is I risk quite low. I only risk 0.2 or 0.1. So for me, a loss really isn't a big deal. So what do we see?
Eski, bro, are you holding the trade to full TP, did you say, sorry, or are you partialing at liquidity points?
So yeah, so if I come back to this trade here,
yeah,
right, so I'd break even here at this structural point, and at this point I'm out the trade, but I don't partial. So for me, that's just shy of 4 RR. So that would be 4 RR banked, obviously with no partials. So I'll be risking 0.2. So that would be like a 0.8% trade for me. Obviously not factoring commissions or spread, etc.
Okay.
Cool. Does that make sense?
Yeah, no, that's great, mate. Thank you.
Yeah. Cool. So in there. So for me, if we come back, what I like to see is price come in, and what I would normally do is I'd have this up move, so your order block already marked up, obviously with a stop here. I mean, in reality, because it's a sell, the stop's more like this because of the spread on gold. But I'll just put it here for and as soon as it breaks, as price comes in, I'll do either 2 things to enter. As it comes in, I don't do this as much anymore, but I'd set a sell stop or buy stop once it's come in. So obviously you can set a stop, because you know price can easily just go bang bang, because I'm not really getting a sort of 5-minute sort of breaker structure or anything like that. I'm purely happy to trade it because it's at a point I consider the extreme end of the 15-minute range. Or I'll just market execute once it comes back in. And at the moment, because I've done this so many times, I'm happy just to market execute straight away, because I know that the probabilities are more often in my favor. So yeah, once you get this break here, so I'd consider that my sign of weakness being broken, and obviously coming in for the LPSY, and I'd be in this trade. And I would be targeting this area here. So what our eyes would give us. Yeah, so I'd be happy to take that. It's 3.5 RR. I'd even maybe just take it to 3, and I'd let it run. Yeah, calm. So that is sort of how I trade the extreme ranges. Again, price can easily just fly through. But more often than not, if you pick the right zones, and it is really about reading price, and what happened here. Extreme liquidation. This is the sort of last move what formed this order block. So for me, it's a valid zone, and if price hits it, it can easily give me a 3 to 5 RR trade. So in terms of a bias from this point, obviously, let me just take a second to see what's happening with structure. So we have, for now, we've held this. We've held this. And we've held this. So, I mean, structurally, it's you could argue we're going to come down into here and, start going to the top side. So we'll see what price is doing. But again, looking at this whole move in place here, right here we've got some equal lows. So underneath what are equal lows and equal highs, liquidity, what is there to be run. And if you think about one of the key characteristics of gold, it likes to run liquidity, it likes to liquidate all the time. So to me, it could easily come into here and pop off, or we could see some liquidation and perhaps even come down to this zone I've marked off here, the imbalance, and that really nice demand zone. So if I was trading this area here on the intraday and I was sort of stuck here all day, what I like to use is the idea of premium and discount zones. So pretty much, if price is around here and structurally it makes sense to look for sales, I'll look for sales, or price comes down here and structurally it makes sense to look for buys, or I'd potentially look for some buys. In the mid zone, again, it really depends on what price is doing. So let's delete this. What's going on? So just going to hide this. Now, it's got order block here. Got sort of a demand zone here, and this was the last demand zone in place. And actually, we look at this one. So another thing I find with gold is So if I'm trading EU or any sort of currency pair, if a zone's been mitigated, I tend to not look at it. But what I find with gold is even mitigated zones where a wick has quite clearly, released orders from that zone and moved on, still holds. And this sort of ties into my idea of using the wicks, what are formed as a supply and demand. Now, I mean, only find this in gold, happens in gold. It could happen in other pairs. Have you guys ever sort of experienced that? You get a wick, what's mitigated a demand or supply, but you can still, like, price still holds off that point. Do you ever get that?
Yeah, I see that a bunch.
Yeah.
I feel like with gold, it seems to, like, obviously supply and demand don't work, but I think it holds key levels really well, doesn't it? Like, that's pretty much what, like wicks in areas that have been tested already, it'll test it again, bounce off it, and continue to give reaction and stuff like that.
Absolutely, and this is what I find. So structurally, gold follows structure really, really well. But every now and then it will just take everyone out of the market and just liquidate both ends. And I think this is why I get sort of maybe a bad rep as a sort of chaotic pair. But if you follow the structure, you pretty much, you can get some good trades. And why I like to use a 15-second Wyckoff as my entry, as opposed to maybe setting a limit at a zone or something, is if it does liquidate, you're going to see that liquidation within the Wyckoff. So, hopefully, like, you don't get taken out as much, because the liquidation, what's happened, then obviously forms part of the schematic. So, if that makes any sense. But yeah, we shall continue. So obviously, we've got this area here. Something might happen here, something might not. Or we could easily feel the inefficiencies below this zone here, take the liquidity out here, and then bounce off. Yeah, so right now nothing's really happening. What I'd kind of be interested in, you let price do its thing. Suspect this to get taken out. Okay, so we've hit the zone. Nice liquidation here actually, as price sort of impulsively starts to come back up. So I'll see what happens. Okay, so this is something I like to see, and it's very much you could call it quite an aggressive way to trade. So obviously, prices come into my POI, even though there's big inefficiency below, and there's more effective zones you could use. Looking at the 5-minute order flow, it's sort of okay, so go down to a 1 minute, we get 3 closes. Yeah, so we didn't get, for my set of rules, what I consider a breaker structure, looking at this on a 5-minute time frame, obviously this wicks this out, but we're still within my demand zone. And on the 1 minute, I haven't seen 3 closes below this wick here, so I consider this as a structure being held, if that makes sense. And obviously we have a 5-minute high here, which has been impulsively taken out. So I will look for Wyckoff, 15-second Wyckoff here, to maybe run to the top side, take these relatively equal highs. I mean, they're not equal, but you sort of see a bunch of orders here, and I wouldn't be shocked if price goes to take these out before making its next move. I'll just close this down. Go down to 50 second. Yeah, we'll see what we see. So as long as it comes into here, gives me a sort of what I consider a nice schematic. I'll look to enter. So call this a break. Dropping in, let's see if Wyckoff plays out. So, yeah, so for me, again, this very much would be my order block, this move here, in this situation. And as soon as it breaks, so the only time I would not use the seeing candles on a lower time frame to determine if structure's being broken is on the seconds, because first of all, on the 50 second, I don't have the time to go down to 1 second to see if it confirms it. So I'd very much rather just say, right, if it's whipped it out, I'm going to class it as a break structure. So let's see what we can achieve. So I'd be obviously I'd be eyeing up that area I just spoke about a minute ago. So would it give suitable RR? Yeah. Probably up to here. And for me, when it comes to, I used to, when price would hit like 2 RR, I'd go break even. But I've sort of not moved away from going break even, but structurally, for me, it has to start making sense. This is on gold, to go break even, because gold can easily come back and tap your zone 3 or 4 times before making the move. So I'd rather stay in the trade, but then go break even later into the trade than to break even early, get tapped out just to watch my trade play out. So let's see what happens there. Yeah, so do you see what I mean? Comes in, it would just play with you. So I probably wouldn't be going break even until maybe we cleared these highs here. But yeah, so obviously I'd be out the trade by this point. So looking for maybe either price to come take this zone here. Something like this would be great because you've got inefficiency here above this liquidity what's been formed. And it's a supply zone 2.0, so obviously price has come in multiple times. And yeah, hasn't gone up. In terms of the origin point, I'd maybe either be looking for price to come back to here, or we just take the last R move. Let's see what happens. Yeah, so nothing here for me really. Obviously now we're breaking down. Delete you, hide. Delete you, so We are holding structure. And starting to break down the inner range structure. So obviously, right now, what are you looking for? I'd still be looking at this PO right here, because pretty much, if you look at the last down move here, it pretty much covers here. And because gold likes to just go to the extreme of each range, you know, it doesn't surprise me if gold would like to come back down here again and do the sort of same kind of move, or even so into this, because again, if you think about the bigger picture here, you know what's happening. We're starting to build a lot of liquidity, you know, within our sort of internal range here. And actually, if you look here, you got like a really nice trend line. So maybe you've got retail buying into this, you know, going crazy. Everyone's going bullish. So I'll let price run here, see what happens. Well, so yeah, exactly what I was saying earlier. So we had these equal lows, building up our liquidity. And at that point here, we had this really nice trend line. So, you know, think about the masses sort of buying into that, you know, and then boom, gold literally takes everyone out of the market. But we still hold structure. So we go to our higher time frames, and that zone I pointed out earlier, you know, holds perfectly. If I look back there at this move, probably wouldn't have got an entry. Yeah, there's, you know, when this is happening, you know, I just don't get involved. And I think this was news. Not too sure. Yeah, I simply don't get involved because there's no point. I can find trades, you know, when price isn't being absolutely impulsive. Let me see. So yeah, we literally blew past this, took out the rest. So I wonder what I've got to sell here. No, I probably wouldn't have got a sell here either. So obviously, look, structurally, there's no real breaks here. And then any sort of move that did happen, I probably wouldn't have been confident enough to use this as a zone to sell, purely because, you know, the way price is just flying into that zone, absolutely flying. I'd sit on my hands and just see what would happen. No brightness. See if it comes into here. What I would do actually though. Yeah, so I'd probably, if I was trading this in the moment, I'd maybe be looking at this zone, see if it gets tapped into, and maybe looking for a 15-second Wyckoff here. But yeah, no, it just flies. So yeah, price is just flying off. Then I think from this point, my memory's way too fresh from the trading week, so I'll probably close off the session here. So I'm pretty sure, yeah, gold touches this daily and then just absolutely drops. So let it play out. Yeah, almost tap it, and then price just rapidly drops down, and then we get the big move. What happens? Yeah. Yeah. So I mean, was that beneficial to you guys? Did you was any value in that, in the way I trade? Does that make sense? Have you learned what you wanted from gold? Anyone got any questions?
No, that's been really amazing, Eski. Thank you, bro. So it seems like kind of like men blocks work really well, and key levels with gold, and just really be aware of liquidity build-ups, because gold will just basically like really want to seek that more than probably get currency pairs. So it seems, because gold seems massively manipulated, right?
Yeah, it really is. It absolutely runs it. So, you know, if we come out here to the daily, you know, it spends 4 days here just building liquidity. You know, takes the top side out, touches the daily supply here. You know, structurally perfect, and you get that massive drop down, and then I think it hits this POI I highlighted earlier, and I think that this was the Friday, so. I'll go into the Thursday, and and then you know, it just starts to run off there, but you know, nothing really interesting happened here. I think I got a sell here. I'll show you guys that sell real quick actually. So it was Friday, and I went, so I sort of thought we were going to hit this and then maybe take some of the inefficiency to the top side before dropping further. So I was in a buy here. So I took a buy here, driven off this 5-minute structure getting broke to the top side. So I failed to acknowledge that it filled this inefficiency really nice, and then just started dropping off. But when this structural point here was broken, I looked at this as obviously now a newly created order block, and so I took 50% of it, and it doesn't always have to be 50%, you know, exact. It's about what is happening with price. So I sort of saw this supply zone here, and I liked it enough to consider looking for a Wyckoff schematic, because you had no mitigation yet. Price is obviously coming to the downside. Tons of liquidity here, what could easily be run. So I believe got in. So come in, and this is what I was saying earlier about. If you're using Wyckoff with gold, you know, the Wyckoff is part of the liquidations. So when it broke here, I did a market execute. I think I posted this in the Discord actually. And I was at work when I was trading, so I was just targeting here because I couldn't really look at my phone. Just took it to that and got a nice 3.5 RR. But if you were to maybe set a limit, just covering the zone, the liquidation candle would take you out. But because I framed Wyckoff within my entry criteria, I wasn't affected by this, and I was able to obviously take advantage of this zone and obviously sell it down. I think that's it really, guys. I hope that has some value. Obviously, I'm really new to this. I'll only be doing this year, so I'm continuously making refinements to my own plan. And now, as I sort of transition into full time, I'll probably start to look at this and make adjustments to the way I trade. I think I really take a lot of sort of inspiration from some of you guys actually, and the way you trade, and I'm going to try to integrate that into my system. I hope you've enjoyed this session. Any questions?
All good for me, Eski. Thank you, bro. I was just going to say, would it not be worth leaving like a runner on some of your trades? Maybe if you just take, say, 80% so that you've got majority of it, break even, leave a runner, because like from the examples you've shown, like there's been so much opportunity to gain like way more R as well.
I totally agree. And now from the start of October, I'll be in a position to have a consistent trading schedule, I'm going to start looking at, if I'm at the top of like a daily range or top of a weekly range or what with a 4 hour range, right? That's actually, if we get a nice 15-minute breaker structure, that's actually leave 20% on to run. So, sometimes when it does run 10 RR or 20 RR, I can obviously benefit from that and obviously still get the bulk of the trade from the 3 to 5 RR I'll be targeting.
Yeah, perfect, bro. Thank you so much for your time. It's been
any time, no trouble.
So from working full time, you were able, like, what tweaks did you make to make it work for full time? When you have a full time job, because I'm kind of in a similar position, trying to figure out how I'm going to manage that until I can go full time. Because you got funded doing this, right?
Yeah. I use this exam. This is how I trade. This is what I traded when I passed my challenge and evaluation with funding talent. Pretty much, it's sort of, if I'm on the charts and, I pay attention to the 5-minute order flow, obviously looking at the 15-minute range, and, there'll be opportunities no matter what point you are in the day. So it depends what your working hours are, really. So for me, it's sort of, I'd either be working, 7 a.m. in the morning to like 4 p.m. or working later in the day until late. So I'd sort of trade around the times I'd not be at work and just try and catch 1 or 2 subs, but go for smaller RR and no partialing. So if I'm catching 5 RR and I'm risking 0.2 or 0.5 if I'm doing a challenge, I really benefit from that trade instead of potentially having to be at your screen longer and obviously going for like a bigger setup. So you want to partial at key areas, but not everyone at work is in a position where they can obviously look at their phone and obviously manage their trades like that. But yeah, I guess it's really around like what your working hours look like, what days you can trade, and trying to fit it into that, and then obviously basing your system around that, and obviously basing your system around what maybe targets smaller RR, but there's more frequent setups within the intraday session, or maybe even swing trading. Look for like a nice swing start of the week and maybe manage that throughout the week. It's something I considered, but I never looked into.
Mm-hmm. But you found plenty of setups, so you weren't just trading just on your days off. You were trading on days that you worked just at home.
Yeah, so I'd get home from work, and currently do still get home from work or before work, try and get a few hours in. And if it's set up, presented itself. Yeah, so this is sort of why I sort of developed the this sort of abilities. So if I'm at like a top of a range, I'm happy to take a 15-second Wyckoff, as long as it's a 15-minute range and I'm working within a 5-minute S&D zone. I'm happy to take that trade straight off the bat and obviously run it to the most probable liquidity point, as long as it hits like a 3 to 5 RR range.
Eski, how many pairs do you trade?
I trade gold and Dow, but I'm gonna, as when I go full time, I'll probably start looking at EU, GU. Probably everything what's on this list really. I'll be looking at a lot more.
Yeah. Okay. Yeah, I think I'm gonna start looking at gold a little bit more.
Gold's good.
Rundown on it. I've never really traded gold. I've briefly looked at it. I've done a couple of top downs like a while back, but
yeah,
I haven't really messed with it in a while. So, but the trades that I was looking at that I would have taken would have been monster trades too, right there, as we were backtesting. So
gold's good. It moves fast. It gives good RR, and the way we trade. As long as you follow price, effectively, it's quite easy for us to get into trades and have good trades from gold.
Following structure all the way down is the key. Honestly, it is the absolute key to this. And if you can follow structure, your structure breaks, your tests, your where they happen at certain levels, at like kind of like what we're noticing. Like I noticed that gold likes to go to 50%. or more.
Yeah, gold.
It likes to do that. And that is one key part of my entry criteria too. So, like I'm definitely going to start looking at this a little bit heavy.
It didn't happen there. Yeah, gold loves 50%. It's obviously the algorithm behind it. Which when liquidity, it can consistently hit that. You look at it, all of it will hit that 50% mark frequently.
I'm having a hard time hearing you, bro.
Hello.
Yeah, now I can hear you. I didn't hear anything into that last.
Yeah. Gold loves the 50% level, and it hits it all the time. Yeah, all the time. But yeah, I'm going to wrap it up, guys. If everyone's happy.
Yeah, good job. Good job for sure.
It was great, man. Thank you so much.
Thanks a lot, Eski. Time for us to start looking for more gold trades, I think.
I think so.
Yeah, gold's good. All right, have a good evening, guys.
Thank you, brother.
You too, Eski. Have a good one, dude.
Thanks a lot.
Bye.